Hi there, welcome to Kneppy Invest. Time for another June quarter Appendix 4C video for a company that did achieve an operational cash flow positive June quarter. This is my mission, to cover every single company that did achieve that fairly significant milestone. I still have 24 videos to do, including 14 standalone videos, which does include Fluence, so 13 more after this. Also do 10 group videos, and one of those videos will include over 10 companies, because the only reason those 10 companies were operational cash flow positive for the June quarter was because of government grants and tax incentives. I have had my eye on Fluence for the last 4 years. In fact, about 4 years ago, when I started following Fluence, there was a little bit of hype in this company. We did see the share price get to above $1, but since that hype, saw the share price rise to that height, we have seen that hype wane, and because of that hype waning, the share price has pulled back to 20 cents. It does look like there is potential the share price is consolidating around that 20-cent level, and this company's finances are improving, and I'll talk about that in the next slide. And all I'm waiting for now is a bit of a breakout in the share price on some good positive financial news. Before we look at the Appendix 4C for Fluence, let's look at some facts in regards to this company. Fluence is a water and wastewater treatment solutions company. And for that very thing is why I'm interested in this company. This is going to be a significant growth area over the next decade. It's already growing quite significantly right now. And as humanity becomes more conscious about environmental issues and realize that water is probably our most precious resource and we have to look after it, we really haven't done that over the past century. In fact, there are some waterways in the world that have been horribly looked after. Just go to India, Mumbai, look at that river there. What's the river there called? It's absolutely awful. So that's where we're heading over the next few decades. We've got to become more aware, more conscious that we have to look after our waterways. And that's what Fluence is doing. The market cap of Fluence, only $128 million. So where I think this company can head in the next 2 decades does make this company attractive at these valuations. And this company is real. They do have business. Receipts for the half year, $50.8 million. And they were operational cash flow negative for the half year by $8 million. Now, when we look at the cash receipts history, you'll notice these big spikes in receipts, particularly the December quarter 2020. That's because of this one big contract they have with Ivory Coast. And they want to get clear of those big contracts because there's lower margins in those sort of contracts. And they want to concentrate on their higher margin business, like their smart product solutions. And they are aware of this, and they do talk about this in their presentations. If you want more information on Fluence, go to their website. You can see everything they're doing, or just go to one of their presentations that they've released in the past year, or preferably the past 6 months. Or you can just go to their Appendix 4C and read that, which they released on the 29th of July. Before we have a look at the June quarter results, just want to go back to the March quarter. And this might have been a disappointing quarter if you read this quarter's results in isolation, because only $10.4 million in receipts. And because they do spend a lot of money, they were operational cash flow negative by $20.9 million. But when we have a look at the cash receipts history, you'll see how lumpiness the receipts are because of that one big Ivory Coast contract. And another reason why they want to go to those smaller, high margin businesses is because you'll smooth out, or they'll smooth out the lumpiness in the cash receipts. They did have $15 million in the kitty at the end of the March quarter. And just for the very fact that I'm doing this video, we already know that they were operational cash flow positive. So let's see how they did turn things around in the June quarter. And cash receipts for Fluence did quadruple from the March quarter, from $10 million to $40.4 million. Not only that, some of their costs, like product manufacturing, staff costs, and administration costs, all actually dropped from the March to June quarter. Because it had receipts rising and costs falling, that means they were highly operational cash flow positive by almost $13 million. And they also increased the money they have in the business from $15 million to $23.7 million. So they are expecting to be EBITDA positive moving forward. And I do think if we maintain to see the general growth in receipts getting higher through time, this company is looking quite attractive at these valuations. But when we look at the chart, you'll notice that its share price has dropped over the past 3 or 4 years. So there has been negative sentiment in this company. So if we maintain the share price around 20 cents, consolidate at that level for a while, wash out all those negative sentiment shareholders from the registry, there is that potential that we'll see a new uptrend developing, and that's the time to get aboard the Fluence Express if it does happen in the future. I've already mentioned that on occasion, in some quarters, particularly December quarter last year, you'll see these massive spikes in receipts. Now, the reason there was that massive spike in receipts in the December quarter was because of that Ivory Coast contract. I'm trying to remember how much it is, something like $160 million overall, and they did receive a fair bit of that money in that one quarter. Now, in the June quarter, that 40.4, they didn't receive any Ivory Coast money in that quarter. So this is some good growth potentially moving forward. They are winning fair few contracts in regards to their smart product solution. So hopefully that momentum can continue over the next few years. The growth rate in receipts from when I started following this company, which was September 2016, 30% per quarter, but that's on a low base, only $260,000 receipts in that September quarter. What I've done is calculated the growth in receipts from the September quarter the following year, 2017, and we're still seeing receipts grow at 12% per year. However, in saying that, between the December quarter 2017 and the September quarter 2020, receipts were just going sideways. So we have seen a bit of growth in receipts the last year, although it has been quite lumpy. As we turn our attention to the weekly chart for Fluence going back to 2015, I've already mentioned there was a little bit of hype in this company back towards 2016, and we saw the share price get as high as $1.20, and then it just moved around, and then that hype died away, and the share price collapsed from then. And it's moved from that high of $1.20 to a current share price of around 20 cents. Even though the share price has fallen from $1.20 to 20 cents, that's a significant drop. This company has raised a fair bit of shares over the past few years. So back then, when the share price was about $1.20, the market cap was over 300 million. Now it's about 120 million. So even though the share price has dropped a fair bit, the market cap hasn't dropped as much as that, simply because of the amount of shares that have been issued during that time period. We did see a little bit of potential consolidation in 2019, but that failed. That was between around 40 and 60 cents. And then potentially we are seeing the share price wanting to consolidate right now on 20 cents. We did see the share price get to a low of 20 cents August last year, and right now it's at 20 cents. We've seen a couple of times the share price wanting to go higher. Around about November, December last year, it wanted to get above 30 cents, but I think a lot of resistance because of shareholders who had bought it in the past at higher prices meant that potential breakout failed. When you do look at the daily chart for Fluence, there's still a lot of movement up and down in little waves. I'd want that to sort of those waves to sort of come together, the moving averages to come together, and that's when we might see a bit of an outbreak in the share price. Right now, when you look at the weekly chart, we still have the share price below the long-term moving average, which is the 50-week moving average. And ideally, we want the share price and the other two moving averages to try and get above that before we confirm any sort of breakout in the share price to this company. So at this point in time, I'm leaving Fluence on my watch list. It is a company I am following very closely simply because of the space they're in. They're in a high growth area, and I do think management have to show they are succeeding in their business plan, but I think the market accepts that this company will grow in the future. Only 13 more standalone videos to do before I complete that part of this mission to do a video on every single company that has achieved an operational cash flow positive June quarter. Look out for videos on these 4 companies in the next week: Tesseract, Red River Resources, and then 2 videos on companies that recently IPO'd, Airtasker and High Pages or HI Pages. I believe HI, I'm just assuming here, HI is home improvement, and that is a representation of a home. When I first started researching, a bit of research on that company, that looked like something else, but it's not. It's supposed to be a home or a house. That is all I have for this June quarter Appendix 4C video for Fluence. If you are a shareholder or are thinking of buying into this company, I'd love to hear your opinions on this company and your thoughts about the future of Fluence. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.